What's going on, everybody? It's Big T with GreenWallSt.com, back with another trading video, and today I'm giving away the keys of the kingdom. Okay, I'm giving away all the secrets because the longer I do this, the more I realize most people just don't freaking care. And they don't, sometimes I really do worry about giving away particular parts of kind of my edge in the market and like really going into detail about things. Because, the more people that see that and try it, it will eventually just make those trades more and more difficult. But I run a trading community at Green Wall Street, and I, post these videos and realize that, the ones that really go in depth and, are looking at charts and actual trades, they get the least amount of views, right? Which actually makes me feel good that people don't care, because I feel like I'm just over here printing fucking money from an ATM and the computer, and most people just couldn't care less. So it's like, all right, and even inside Green Wall Street, most of the time I'm at the desk an hour before the market opens each day, and there's probably a fifth of everyone that's subscribed to Green Wall Street that's even online, ready to go and ready to trade. So most people just don't have the willpower and don't care enough to actually execute on this stuff. So that really is an edge in itself. If you can just give a shit and do the work, that's really half the battle. So I can give away fucking everything for free, and most people still aren't gonna do it. So I'm not gonna give away everything, but I'm gonna hopefully in this video show you how to just think a little bit more deeply about trading and stocks. I kind of compare this. We all know COD, right? Most of y'all are here from Call of Duty. I play Call of Duty. It's the like I think of unprofitable and profitable traders like I do amateur and professional Call of Duty players. For example, you're playing a 4v4 match, amateur Call of Duty team. They get 4 dead on the other team. They're playing capture the flag. Their thought is, oh shit, we need to pull the flag and score it. Right? And so like 2 people go for the flag at the same time, and they're like, oh shit, what are we doing? And then they run it down the middle of the street. You spawn up, shoot them in the back, easy kill, they suck. Right? It's kind of the same thing with unprofitable traders. So the professional Call of Duty team in that scenario, they get 4 dead. They're thinking, okay, we have 4 dead. We know we want to pull the flag back alley. Therefore, we need 1 person going for the flag. We need 2 people on the right side of the map, and we need 1 back near our base, because we're going to force them to spawn in the back left portion of the map. And whenever they spawn there, they're going to have at least 1 person overextend and try to stop our flag run. So therefore, I want to go ahead and position back at our flag, pre-aim around that corner, and be ready for them to come before they even know. You have to know what other people are going to do before they do it. That's how you play professional Call of Duty. That's how you do anything at a really high level. Trading's the exact same way. It's not all surface level thinking. It's not, oh, there's resistance at this level. Everybody can see that. There's resistance at a certain level, so I'm going to short it, and then when it goes down, I'm going to cover it, and I'm going to make money. No, as a professional trader, a lot of times, sometimes you'll get easy trades like that, but a majority of the time, you're going to have to think of what is everybody else thinking, what's the surface level play, and then how can I position around that if everybody's thinking that way. How can I think 1 level deeper? How can I go 1 step deeper and be ready for that? And this is a trade on IMMX. We'll go ahead and hop into it so you can see what I mean. And there's actually, there's 2 trades here, right? So stock is chopping around in a 240 to 260 range. The stock's up 60%. It's a small cap, really high volume, good range, good action. This is the type of stuff I want to be trading each day. My idea is, even this first trade, this is not the one I'm talking about, but my idea is if it starts to try and break out of this 260 to 240 channel and it fails, right? So everybody stops out of their shorts and everybody buys into the breakout and it fails. Well, I want to short it because now everyone's a seller, right? So even that is like kind of this is a deeper thought process. So that's what I'm waiting on initially, is sort of that breakout attempt and fail, right? And we're going to speed it up to when we actually get there and make the attempt, because the stock kind of chopped around for a little while each day. And I'm just sitting here waiting as we're trading in this range, and I'm waiting for, again, that breakout attempt to start over 260. So we hit about 259 there, And, I'm watching the volume come in. I've been watching the stock for like 45 minutes. And here we go. Here's 260. Here's 263. Here's the attempt. And I see the volume and I see it start wicking back real fast. So like as soon as it got up to 265, now it's 255. So immediately I'm putting some on. And then I'm going to make sure for just the next few seconds that we don't immediately kind of reclaim that. And then I put on the rest of the trade, right? So that was the first trade attempt, is putting that on, and boom, we call that a stuff move. It tried to break out and it stuffed. So into that stuff now, I'm looking at levels of support, that 240. I'm looking for the range to break to the downside. It tried to break to the upside and it couldn't. That move failed. So let's see that test on the downside. And what happens here next is really what I'm talking about. Like if this trade was going to be easy, it's just going to work. Like it's just going to be easy. So what I expected it to do, my base case here was, let me see 250 kind of hold as resistance. I want to see this bounce fail, right? And I want to see it move lower. And I sat there and watched it for, 5 or 10 minutes or even longer, and it just couldn't do it. And I'm trying to stay patient, and I'm watching it. This is like that moment where I'm on the edge of my seat. Like I can feel this thing about to tank to 230, right? And I'm going to cover that short and make $500. And, I'm watching it, but I also know that everybody else is watching the same thing, and it just isn't working. So what happens when everybody's thinking what I'm thinking, right? Everybody's going to have a stop at the same level. So you had that next level thinking on the first trade. Well, what happens when that trade doesn't work, right? Now it doesn't break down. So everybody is going to now everybody that's short the stock is going to have their stops above the high of day, because that's the surface level thinking, like just going to pull the flag out and run it down the middle of the map. Everybody will short the stock and have a stop loss at the high of the day. If it breaks the high of day, they'll stop out, right? And you'll see what ends up happening in this is the stock gave so many warning signs that it wasn't breaking down. So many times it tried to break down under 245, under 240. You have to pay attention to those key moments and just get out of the trade. So like initially when I put the trade on, there is edge there. That trade could really work. But as it sits there and chops around for 20 minutes, 30 minutes, it starts to turn more into a 50-50. And that's when you have to recognize that and get out of the trade. Right? You don't need to be sitting in full size, or at least cut some of it and wait until the edge presents itself again. And you can see everybody now stops out at the same exact point, and the stock pops all the way to 280, right? And the real trade comes in after this. You'll see where I shorted it was at 270. It's like, why am I shorting this at 270? It's because I just waited for everybody to get stopped out of the trade, right? I'm trying to think a level past him. This maybe even be like, I don't know, it might be like level 3 type thinking. You're trying to think of what is the obvious trade, what's the next most obvious trade, and what's the next most obvious trade after that. It's like, I'm waiting for everybody to get stopped out of the trade. And now that they've all stopped out, right? All of those short sellers have stopped out, and people are buying this breakout because they say, okay, that channel broke out to the upside. Here we go. I'm now expecting the stock to come back down because all those shorts are out now. All those new longs are in, right? And that's exactly what ends up happening. So even though the stock broke out, all it did, we call this a clear out in trading, is it cleared out those highs. It ran everybody's stop losses. Everybody ran in there to pull the flag and run it right down the middle of the street. And, that's the most obvious play. And, you can see the stock start to roll over from there. And I covered some of the position, and then, we end up making a move back all the way underneath VWAP. And then the stock tanks to, 240, 250, and I cover the rest of the position because I figure I've caught the meat of the move at that point. There might be another 10 cents or 15 cents, but just like we talked about risk reward and how it's dynamic and it changes as the trade moves along, I'm not going to risk that entire profit to make 5 more cents. I'd rather just lock in a majority of the trade and take it. So that hopefully made sense. That was kind of the thought process behind IMMX, and that's really the thought process that you have to have if you're an intraday trader is, you know, you have to know what the base case scenario of each trade is and what the surface level thinking is. What is every trader thinking, and where is every trader's stops? And how can I use that to my advantage? How can I wait for those people to be taken advantage of and then profit off of their, I'm not going to say stupidity because it's not stupidity, the kind of herd mentality. You know, I guess it's a bit contrarian thinking. You don't want to get, you know, I've been in the mindset where you want to, you know, be a contrarian on everything. Like if somebody's got an opinion, you disagree and you think you're right because you disagree. That's not always the case, but whenever you do have certain trades like this that are crowded and a lot of people are, you know, thinking the same thing you are, you have to think, how can I wait until those people get taken advantage of and take advantage of that situation in turn. So hopefully that makes sense. The market, it's really just a bunch of mind games, you know, and some of it is subjective, some of it is feel. Trading is just as much art as it is science. There is no, you know, unless you're some super genius coder that's coded some sort of algorithm and you're trading some really, you know, minute arbitrage opportunity or something, like it's some feel base, it's some gut base, and you have to just kind of got to feel your way around in certain trades, and they're not always going to work exactly how you want to. Of course, like I said, you know, I wanted that first trade to work. You know, I wanted to try and break out, fail, and then break down. Boom, easy trade, you know, but that didn't work. So when that doesn't work, you know, how can I get out before this candle, right? I don't want to be the one getting taken advantage of and say I'm short at 255, I stop out at 275, and then the stock comes right back down to where I was short. That happens to people all day, every day. So recognizing, again, the key moments, the key levels, that is the edge in trading. You have to recognize if something was going to be easy, where would it have fell? Where would it have broken out? And if it can't do that, you need to either de-risk or get out of the fucking trade because it's not the same trade anymore. You know, like it's like sometimes, you know, I'll say I want to wait for a stock to top and short the bounce, but you don't want to short the third one or the fourth one. Like if something bounces into resistance and then it tanks and it finds new support and then it starts holding higher lows, well, the stock could go back to the same exact price that it was earlier, but it's a completely different stock. Because, you know, beforehand, there was no level of support. You didn't know what was down there. There was less certainty. And now there is a level of support. You're holding higher lows. So you have to wait for the next level. It's like, again, it comes back to stocks evolve as the day progresses. And I don't know. Hopefully y'all got some value out of this video. Like I said, most people don't give a shit. And, you know, it is really difficult, especially in the moment when you've got money on the line, to be able to make these decisions and make them confidently. But, you know, it's where experience comes into play and that sort of thing. So anyway, that was a trade on IMMX. I think that was, I don't know, about a $400, $500 trade. So nothing insane, but you get 2 or 3 of those a day. And, you know, I showed last year $1,200 a day on average is about $300,000 a year just to play some mind games on a screen. So doesn't take you know, huge P&L swings each day. You don't have to swing for the fences each day. You can just make good quality decisions multiple times a day. Stay patient. Trading is a lot like fishing. You know, you're throwing your hook out there and you're waiting for something to bite, and you don't go, you know, if nothing's biting that day, you don't go out in the deep end and start fishing for sharks. You just wait till the next day, and hopefully you wake up and there's a lot of little salmon in there. You can eat them. You know what I'm saying? You know what I'm saying. Anyway, that's going to do it. Thank you all so much for tuning into the video. Enjoy the rest of your Sunday afternoon, and I will catch you right back here next time. If you did enjoy the video, be sure to leave a like if you didn't, just to refresh it and give it one more chance. And as always, guys, I don't really have